Good morning, everybody. Hope your evening went well. I went out walking yesterday in the afternoon. It was 45 degrees. Wind was 30, gusts to 45, and we've had 3 days of that. That's one huge fan. If you think about the horsepower needed to whip winds up like that, I mean, even 50 miles across, let alone from for the entire state of Kansas. Everybody else that was getting those kind of winds. It's one big fan for sure. So today they have us getting close to 60 and then drifting back up close to 80 by Sunday. So I hope they're right. Spring has been delayed by quite a bit here. We're at least a month behind now. The warm-up will not be good for the wheat because we did not get much moisture out of this. Wheat crop is stressed, and hard red winter wheat is people food, especially in foreign countries. The Chicago wheat is soft wheat that trades on the Board of Trade. That's good for cakes and muffins, not good for bread. In the Middle East, that bread ration that governments supply to their poor people is what keeps them in power. So hard red winter wheat is people food, and without hard red winter wheat to export around the globe can lead to food riots or more. So we desperately need moisture. Colorado, western Nebraska, Kansas, Oklahoma, and Texas to salvage this crop. Okay, the overnight session was a trading range. We had wanted to sell failure to take out 24 to 04. The overnight session high is 24.02, matching yesterday's high. That's pretty much the same. London's high was 01, then 124 even. So we got pretty good resistance at the buck. So we'll make sell 1, 31 to 03, and then sell 2, 7 to 11. I can't see us breaking out of the range because of the FOMC announcement, but we do have news this morning that can shake things up, but probably will not be factored into prices completely until the FOMC announcement is made. Starting off with ADP, private employment. 210K. Advanced GDP, 1.1%. Deflator, 1.7. Employment costs, plus a half. Chicago PMI could come in higher than forecast because of the strength of the automobile industry. .9, that's a big number. It does show economic growth. And FOMC cutting $10 billion, going down to $45 billion a month support for the market. Interest rates the same. So we'll get a reaction off the ADP. Comes out at 8:15 Eastern. GDP rolls in at 8:30 Eastern. Maybe it's let's see. God, I may have the times wrong on ADP. I didn't look, so somebody will correct me on that if I'm wrong. So I just basically going to sell 124s, 124.04s, and going to try to buy the 24.28. Would like to buy it a little cheaper. We haven't had a lot of luck breaking the market. 24.28 has been pretty good support, even though the profile 8:15 Eastern. Thank you, Don. Even though the profile has been pointed lower, so it's I think going to be pretty stout support. Now we have FOMC today We have non-farm payrolls on Friday. Large institutions will be on the sidelines, meaning the control of the markets will be by exchange members. They tend to go get stops just outside of support. So stops below 22 are a possibility, and that leads to our second buy area of 17 to 21. But look for a trading range market. Sideways development, perhaps we'll get new spikes. Now, after the FOMC makes their announcement, then today's news will be factored into it. And the GDP number is going to be explained away by bad weather. Things are looking better. Just look at the ADP number showing job growth over 200,000 and the Chicago PMI number. And the so the bad news is being attributed to weather. Whether or not the underlying statistics support that or not. And we've seen bad housing numbers blamed on the weather, with the biggest growth in the Northeast where the weather was the worst, and big misses in the South and the West. So the economic numbers still overall support an economic growth scenario of 2.5% plus or minus a little. News out of Asia, the provinces of China are reporting big decreases in growth. China will still say they're going to make their 7.3, 7.5 growth figures for the overall year. Japan's economic numbers are really starting to contract pretty quickly. So again, around the globe, best case you can make is for low to moderate growth, not moderate to high economic growth. And ultimately, that's what drives the stock market. There will be some earnings announced today, but again, they will not be a factor until after the FOMC meeting, in my opinion. Okay, the 30-year is a little weaker, relatively speaking, than the 10-year. The knob spread has come in a little bit. But there's really good support in the knob spread in the 9.5 area, and there's really good resistance in the knob spread above 10.20. So we've got a distribution that's pointed lower. We do have stops beneath this low the other morning at 24. We're at 04 right now, so we'll make 24. 28 first support, a buy of 29 to 25, buy one. Stops below yesterday's lows, we'll make a buy to 17 to 21. Okay, London stopped at 34.13. Got a little dent at 8, so selling 7s to 11s will be the first sell, fairly aggressive. And then 15 to 19 will be sell 2. Idea we can trade it a little bit lower this morning. The ADP number will impact the market first, probably take us lower, followed by the GDP market, which will stabilize the selling if we actually catch that. And then Chicago PMI number will be the next number up. Okay, gold overnight was pretty quiet. Didn't do a lot, as you would anticipate, given the FOMC today. A lot of the buying in gold is because of the financial fears of a lot of people around the globe, and the political instability that can cause. That's why the retail accounts are buying gold anyway. Long-term money managers have gone to the sidelines or are not seeing the fundamental growth potential in gold this year, so they've been quietly liquidating. They're not supporting the market, so it's we've got retail buyers and long liquidation by large institutional accounts and an occasional smash by central banks to deal with. Okay, 85, 87 is pretty good support, so we're going to leave that in. I think we might be able to go a little lower this morning. and then 80, 82 will be buy 2. On the sell side, 95, 97, and then 99, 1301 for sell 2. I do look for this market to be on hold until Janet speaks. Okay, the euro all over the map. It spiked. Yesterday we were talking about great support in the euro at 37.75 or below. It touched that overnight, and it has since rocketed back. So it's really, really, really. I think one of the things that can guide you in trading the euro, anytime it moves 50 to 75 ticks, fade it. If you don't like what happens, wait a day. It's really, really a tough call, but you can see once again the buying that we have below 75, and we certainly have a seller in the 38.75. That's 100 points. So right now stops above 50 have been gotten, so we'll make 50 to 60 sell 1. The only reason it's a sell is because we've come so damn far overnight. Been 75.85 for sell 2. The breakout came from 37, so we'll get started at 25 to 35 on buy 1, and then the buck to 15 for buy 2. But the fundamentals have been so choppy in the euro. I mean, it just moves 50, 75, faded. We've moved 100, so I think that's where the trade is, strictly based on how far we have come. Longer term, I think it's headed lower. Longer term, the European Central Bank wants it lower, but they have not been nearly as effective as our central bank in controlling prices. The new sanctions put on Russia by the EU and the United States, universally discredited as a joke. I mean, being perfectly frank, if you are an ally of the United States with this administration, you'd have to question whether you can get any support at all if you've been a long-term ally of the United States. And if you've been a traditional historic enemy of the United States, we're looking the other way. So everybody knows the United States isn't going to do one thing other than send a check to the Ukraine. And Russia's in the driver's seat, and Russia's going to get pretty much what they want. So the crude oil market is telling us that there's not going to be any major outbreak in fighting between Russia and the Ukraine. And the Ukraine doesn't have the means or the wherewithal to do anything but a very prolonged, pronounced guerrilla resistance if Russia does come in and take them over. Russia doesn't have the money, Russia doesn't have the troops, Russia doesn't have the training to go in and take over the Ukraine. And Russia's attempts to take other countries over with armed force, Afghanistan and Chechnya are the two biggest examples, and they failed miserably. At that. So Russia goes in and razes the country, kills everybody in sight. All the easy targets are taken off the board, and the population is enraged, and they become even more dug in to fight their oppressors. So my feeling is, as you all know, is that Russia has accomplished pretty much what they wanted to accomplish, and they don't have to do any more. So we'll look for crude to be a little lower this morning. We're below 100. If we can change 100 from support into resistance, then I think it's a pretty safe sell down to the 97 area. Okay, the E-mini, same situation as the financials. The FOMC should freeze the E-mini this morning. Look for a trading range bounded by 65 as support and 75 as resistance. Just going to look to trade the trading range. The ADP number should be supportive. The GDP number will not be supportive if as forecast, but it will be ignored. So I think we'll jump from ADP to Chicago PMI and then to the FOMC number as far as the market's focus go. ADP number looking for 210,000 in growth. Chicago PMI 56.9, and the Chicago PMI number could come in higher than that. Then FOMC a $10 billion cut for the treasuries and mortgage backs. Interest rates left the same. There will be stock earnings announcement, but they will not play until after the FOMC. And then Friday's non-farm payroll number will come back in and curtail activity. So today is April the 30th. It's end of the month. We won't see any incentive by large institutions to be sellers. Everything is pointing to a trading range, in my opinion. So we're going to sell 74s, 76s. It may take a while to get there. Might go up and get stops above yesterday's highs, but don't think you can hold them. On the buy side, we're going to buy 65, 67, and then 60, 62 if we happen to get down there. Don't see any way we can make it down there, but every now and then the market does stuff I don't think it can do, right? I hate it when that happens, as everyone does. I said this, therefore it has to happen. And that's one of the thoughts or way of thinking that you got to erase from your gray matter between your ears. That leads to huge losses. Okay, I'll be back in 15, 20 minutes or so. We've got news in 7 minutes right now, followed by GDP numbers, employment labor costs on the half hour. Back as soon as I can get back.